Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Businessweek for this. Yeah, it's kind of a Fed Wednesday.
Yeah, I think it's fair to call it a Fed Wednesday, August 21st, 2024. We got the minutes from the latest Fed meeting. They are set to cross the Bloomberg terminal, Carol, in just about 20 seconds.
Yeah, watching very closely, and we'll break them down as soon as they cross. Having said that, we got a lot going on. It is an interesting week. We are so Fed-focused, if you will, because you've got Jackson Hole underway. Our Mike McKee is there, so we're going to head to him in just a moment. But you've got Jay Powell, Fed Chair Jay Powell, speaking on Friday. So we're all looking for clues about what we get in terms of rate moves come September. Having said that, we've seen rates, the U.S. Treasury curve, move lower today on expectations that indeed we are going to get that Fed cut.
All right. Well, speaking of the Fed, here are the minutes. The Federal Reserve saying that several officials saw a case for cutting at a July meeting, though the vast majority saw September cut as likely appropriate. Almost all Fed officials wanted more inflation data, though, before cutting rates.
Yeah, and what's interesting is I'm looking just a little bit of a reaction, maybe the NASDAQ just ticking a few points higher. Let me move on over to what we're seeing in the Treasury curve and looking at rates actually dip just a hair lower. So not much reaction. So we'll continue to watch that. Having said that, we've got a lot going underway. We're going to also check in at the latest from the DNC in Chicago. We're going to talk about Ford's latest gear shift when it comes to EVs. And we're also going to get into the latest on the tech tycoon, his yacht that has sunk. Of course, we got that news just about 48 hours ago. So we'll get the latest on that.
Yeah, all that and more coming up over the next hour. Let's get to the minutes from the July FOMC meeting because, as we mentioned, the vast majority saw a September rate cut as likely appropriate. Several officials saw the case for cutting at the July meeting. Officials, Carol, saw upside risks to inflation as diminished and downside risks to employment were seen as increased.
All right, let's get to it with Bloomberg News international economics and policy correspondent. He is Michael McKee, not at the Fed as he often is, but rather at the Fed Ranch out west, you might say. It's also known as the annual Jackson Hole Economic Policy Symposium. Mike, good to have you here. So, Tim, just breaking down the headlines. I first want to ask you about several officials saw the case for cutting at the July meeting. Does that, I don't know, what does that tell you?
Not much, Carol, because that's something that Jay Powell had suggested in his press conference at that meeting. He didn't put a number on it, but he said there was a case made for cuts at that meeting. I don't think people pushed too hard for that, but you could imagine it was somebody like an Austin Goolsbee or even some of the others. But at this point, they all decided that maybe because Jay Powell and the majority were saying don't cut now, we will wait. But they do say in the minutes that the latest data they had gotten gave them more confidence that they were going to be moving down to the 2% level and it would be soon appropriate to move rates.
Have any of the data that we've gotten since that July meeting of the Federal Reserve, Mike, shifted the way that you think any of these members of the Fed view the path forward?
Well, I don't think significantly shifted. What we have seen, though, is the weakness in the labor market report and then today's downward revisions. You've got some people who were suggesting they wanted to wait, like Raphael Bostic, who has now said he's open to cutting rates in September. And in that case, it's probably going to be the August jobs report that we get at the beginning of next month that will make the decision for them of how much they cut. It does look like they are on track to cut.
All right. So it's interesting, too, Mike. I feel like investors, you got bond yields, falling. We saw that earlier on that big downward revision of U.S. payrolls, which reinforced those prospects for Fed rate cuts in September. So again, in terms of 25 versus 50, can we pretty much say at this point, if nothing dramatic happens between now and the next Fed meeting, that we get that quarter point cut?
I think that's the base case. If we got a weak August payrolls print, then that might move them towards 50. And if we got a big drop in the inflation numbers, which doesn't seem likely, that could also give them an excuse to do that. The question is, do they feel like they're behind the curve? And everyone I have talked to in recent weeks says they don't think that's the case, that they believe at this point the economy is pretty strong and doesn't need cuts in a we are worried about recession kind of way.
Wait, that's a perfect segue to bring up something that you brought up just moments ago, and that was the payroll downward revision that we got this morning from the Bureau of Labor Statistics preliminary benchmark revisions. 818,000 for the 12 months through March of this year. Does that change the idea of the Fed potentially being behind the curve at all, Mike, that we see increased weakness when it comes to payrolls?
Well, I would think they would say no for a couple of reasons. One is because that implies that we went from an average monthly job gain of 242,000 to 174,000 over those 12 months. And 174 is still a very strong number. You're looking at about 100,000 for kind of a neutral hiring level for the United States. So the Fed would say we're still seeing relatively strong job growth. And also this number, as you mentioned, just goes through March of this year. There will be another quarterly survey that will be incorporated into these revisions when they put out the next round in January. And that could see a rebound, or it could see an even bigger cut. So they know there's more data coming, so it doesn't really push them too hard one way or another. And finally, the third thing is, of course, the revisions we got today don't count undocumented workers because companies don't pay the Social Security, Medicare, and unemployment tax on them. And so they could be overstating how much the revisions are. And all that gets worked out between now and January.
Okay, yeah, Mike, talk a little bit more about the immigration factor here and the undocumented immigrant factor here, because I've seen this mentioned a few times in different write-ups that I've read of these data going into the number and then after we got the number this morning. What are some numbers being thrown about by around the impact about the impact of undocumented migrants on the labor force?
Well, you know, there are not a lot of specific numbers because people really don't know. I mean, we know there were several million who came in over the past year or two, higher than we had been seeing. And we have seen jumps in the labor force, and that's what people are thinking is the reason that the undocumented aliens have influenced hiring, that they were getting hired for jobs, particularly in certain low-wage categories that weren't being picked up because, again, the companies don't pay unemployment insurance if you're undocumented because they can't get unemployment insurance. But we did see a number of revisions lower in the food services and bars and drinking places area, and also in some of the healthcare services area, where people who are undocumented often get jobs. So it's hard to say exactly how many are involved, but I'm sure there are some. We just don't have a good handle on it.
All right, Mike. So now I'm thinking tick, 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 this long list that we've all been ticking off different things to get to the next Fed meeting, which is September 18th. As you well know, we've had a lot of data points. We still have, another jobs report. We've got a couple of inflation prints before we get to the next decision. But we also have Jackson Hole, where you are. So just remind us of kind of what happens, what kind of discussions will come up, and is it really just all about what Jay Powell has to say come Friday?
Well, for people on Wall Street, it's all about what Jay Powell has to say on Friday. They hope he will say, we're going to cut rates on September 18th, which he won't, but that's what they'd hope for. He may give a strong signal that that is coming. The rest of the conference is basically academic theories about economics. In this case, the subject matter is the transmission of monetary policy. And so there will be academic papers presented and discussed, but none of it revolves around the idea of where are we now and what should we be doing right now.
That would be too easy, right? Okay. All right. Just good to know. Michael McKee, we know we'll be checking back with you. So appreciate you carving out some time for us to go through those Fed meeting minutes. That, of course, is Bloomberg News International economics and policy correspondent Michael McKee there in Jackson Hole.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, this next story, both troubling and sparking still many questions. It is among our most read on the Bloomberg terminal today. It is, of course, about the sinking of the yacht belonging to tech tycoon and former co-founder and CEO of Autonomy, Mike Lynch.
As our team notes, the ship was built to withstand so much and yet quickly disappeared into the Mediterranean. With more is Bloomberg News technology reporter Olivia Solon, who joins us from London. Olivia, officials are still trying to piece together what happened. What do we know about the evening, the timetable, and what happened to the yacht and those who were on the sailing vessel?
So in the very early hours of Monday morning, this 56-meter sailing yacht called the Bayesian sank in a very violent storm that included a type of tornado, a kind of waterbound tornado known as a waterspout. And this took place off the coast of Sicily. The boat had been anchored about half a mile away from the coast at the time, and passengers were sleeping when it happened.
All right. And so, of course, we're trying to figure it all out, especially when, you've got a boat that was nearby, right? That is, there were no problems or no issues. They obviously had to deal with a storm. So how are they kind of trying to piece together and figure out what happened? Because they're still trying to access the yacht, correct? Which is at the bottom of the floor, pretty deep water, it sounds like. And that's not an easy process either.
That's right. So I spoke to the captain of the ship that was actually right next door to the Bayesian when it sank. And he said he was up at about 3 a.m. trying to make sure that his own vessel was secure. They knew the storm was coming. They needed to put their engines on, keep the anchor down. And it took quite a lot of effort to keep their ship stable. He said he was right next to the Bayesian and they were trying to maneuver to make sure they didn't bump into it. And then they turned around and suddenly the ship was gone. And he said his first mate said to him, "Oh, it sank." And he was like, "That's absolute nonsense. It's an enormous ship. There's no way it went down that quickly." But it turned out it did. And I think a lot of the questions about what happened are centered around how it was able to take on so much water. The main question is, were there any hatches open that would have led it to have sunk so quickly? What it did have was this very big mast. It was a beautiful sailing yacht, like a very unusually large mast. Obviously, the sails would have been down, but that would have picked up the wind anyway. And that could have kicked it off balance, they believe. But we understand that wouldn't have been enough to sink it. So to sink it, it would need to take in a lot of water, either from damaging the hull or from having some kind of opening. But the captain that I spoke to said that was one of the first questions he asked the crew, who he was first on the scene and picked up 15 of the survivors, and said that the crew from the Bayesian, from the sunken yacht, said that everything had been closed. But we don't yet know for sure.
Yeah, I mean, I'm someone who spends a fair amount of time actually on the water in a sailboat. And yeah, you never want to take on water. It's not a good thing. But the other thing is, I guess, as they start to look at what's underneath the water, is there any idea whether or not it was struck either through lightning or through, you mentioned the water spout, that somehow it actually cracked the hull? Because that would certainly be something that would cause a ship to sink really, really quickly. Because a lot of times when there's problems with a boat, it takes a while sometimes for them to sink.
Yeah, well, we've been in regular contact with the Coast Guard and the other emergency services who are surveying the vessel. They've had divers down there for several days, or a couple of days now. And as we understand it, the hull was not breached in any obvious way. And I don't know about the lightning. We do know that there was this water spout that they believe hit the boat. That could have tipped it off balance, but that still doesn't really explain why it sunk within a matter of minutes.
Olivia, your story mentions questions about the keel on the boat. What do we know about it, and what are some people questioning with regard to the keel?
Right, well, I will not pretend to be a yachtswoman, but this vessel apparently had something called a retractable keel that could be lifted up under certain conditions. And if that was indeed lifted up at the time, that would have made it less stable than if it had the keel in the down position. But again, I don't think that's something that's been determined yet.
Yeah, from someone who does, retractable keels, basically, a lot of boats have it so that you can get into shallower water. So you can actually lift part of the keel. And then when you're out in water and out in heavy winds, especially for a sailboat, you have the keel down because that's what's the counterbalance so that the boat doesn't necessarily go over as the sails fill with wind. So it does seem like so many questions. The difficulty in terms of how deep the water is, how are they progressing? I thought I saw something about maybe robotics getting involved to help in the search, if you will. What do we know about that?
Yeah, so the vessel's about 50 meters underwater. So for the divers, it's pretty deep for divers to be going under. It means they can only spend sort of short stretches of time. We've heard anywhere from 8 to 12 minutes at a time before they have to go back to the surface to sort of decompress. They have had robotic underwater vehicles surveying the vessel underwater. I think that one of the key problems was actually getting into the boat under the water, breaking into it in the end. There was lots of debris, lots of furniture kind of blocking the entryways. So they took quite a long time to get in, but they managed to get in today and have retrieved, I think they've retrieved 4 out of the 6 missing 4 bodies. There are 6 people missing, and I believe they've found one more body that they're in the process of retrieving from the vessel.
You mentioned earlier about, I think it was a crew member or something that said the hatches were closed. I feel like what's going to be key to kind of understanding what happened potentially is talking to those people that were on the boat. Are we hearing anything more? I can only imagine the shock, the trauma. Certainly for folks who lost family members or really good friends. But are we hearing anything more in terms of the people who are actually on that boat?
So we haven't spoken, I don't believe, to any of the crew who were on the boat yet. So the person that I interviewed was the captain of the vessel next door. That vessel was the first to respond to the scene. They sent a tender out. They went up and found the life raft with 15 people, including this 1-year-old baby, brought them all onto his schooner, and they gave them, there was 4 injured people we've heard, and they did ask them some questions about what they felt happened, but what I was told, and obviously this is secondhand, was that the team on the vessel were just as surprised at how quickly it sank as everyone else has been.
Yeah.
Olivia, remind everyone about Mike Lynch.
So Mike Lynch, founder of Autonomy, which was sold to HP for about $11 billion in, I believe it was 2011. He's one of the UK's most prominent tech entrepreneurs. His reputation was somewhat dragged through the mud by a fraud case in the US that he was recently cleared of allegations of fraud relating to that purchase of his company. And he was about to start this new life of sort of rebuilding that reputation. He has this venture celebration of his legal victory with some close family, friends, and some of his legal and financial advisors.
One of the things I think about a lot, I track, a lot of people who sail around the world, and they have tons of different programs in terms of weather and what's happening so that they don't go certain places or they get off their boat when they need to. Is there anything that we're hearing about, obviously hindsight is 2020, but I just do wonder if we're hearing anything from officials that say, this could have maybe been avoided or that they could have maybe foreseen that something was going to happen, or is it just too soon to really tell?
I think everyone we've spoken to said that the weather had been bad. The water temperature has been particularly warm in the Mediterranean this year, and that has apparently contributed to a lot more of these water spouts, these tornadoes over the water. And so there have been these intense storms. I think again, what we've heard, if you have a direct hit by one of these water spouts, but yeah, there was bad weather in the area, and there have been a bunch of these water spouts recently. And, as I said, the captain I spoke to said they got up early. They knew the weather was coming. They were preparing the ship for when it hit, and it hit between sort of 4 and 5 a.m. in the morning. But they were kind of ready for it, although they did say it was a very difficult storm to kind of stabilize their vessel in.
All right. Yeah. Well, very, very difficult. So appreciate being able to get the latest from you on this situation. Olivia, thank you so much. Bloomberg News technology reporter Olivia Solon joining us from London.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Shares of Target today are surging. Ticker TGT up right now by 12.3%. The company ended a string of sales declines in the second quarter, drawing in consumers buying more items on sale and discretionary products. We've got Jen Bartashus with us, senior retail staples and packaged food analyst for Bloomberg Intelligence. She joins us from BI headquarters in Princeton, New Jersey. What has worked so well for Target since that big slump a couple of years ago, Jen?
Well, what Target has really done is they've honed their focus. They've listened to their customers. They've looked at ways to reduce prices and make things more affordable or offer more value to people. And they've mixed up their assortment. They've added new things. They've tried to make things fresh, new, to appeal to those customers. And for the first time in several quarters, we're seeing positive traffic both in stores and online. And that sets them up for a strong second half of the year.
So can we assume that they've kind of changed strategy, or is this just, whoa, we just got it right now? How do we guarantee that this continues, Jen? You know, it's always like, all right, great. What are you going to do for me next quarter and the quarter after?
Yeah, I think this is where actually one of the interesting divergences is where you see where Target is versus Macy's, which is not doing as well today with their results. Where, you know, Target is pretty good at being quick to pivot and quick to implement strategy. And when you think about things more in the discretionary category, that takes a little bit of time to get the assortment in, get it designed, get it produced, get it in stores, and it's in stores now. And so, you know, I think that what they've got in progress will last for at least another couple quarters. The question, as you said, Carol, is can they stay on top of whatever the consumer tastes change to over the course of that time?
Shrink. This was an issue over the last couple of years for the company. I remember them citing shrink for the reason to close stores in certain parts of the United States. There was some debate whether or not that was actually the reason they were closing these stores since other ones opened in similar places. Putting that aside, what did we learn about shrink in the most recent report?
Well, shrink is actually getting better.
Okay.
And so,
this is the idea of stuff getting stolen or just disappearing, right?
Exactly. It's things that are either lost to theft primarily or through damage in the store. And so what, you know, there's been a combination of new technology implemented at the front end when you're checking out to help make sure that people are being upfront and honest when they're using self-checkout. But also it's that the consumer is a little less frantic. And that was leading to some of the theft issues that they were having. So a combination of those, they actually realized more benefit from a reduction in shrink this quarter than they expected. They should receive a little bit of benefit next quarter, but not nearly as much. So the benefits from that coming down is probably realized for the most part and will be less of a tailwind as we go through the rest of the year.
All right, so I think about Target, and I feel like for such a long time they stood out as a retailer, just, you know, innovative, interesting, cool. Who is their customer? And I guess I'm curious about that because how much that is tied to what goes on in the economy.
Yeah, historically, Target's core customer has been sort of that middle-income consumer, and, you know, some of the higher part of the low-income consumer as well. And you certainly had higher-income households there, but the core was that middle income. And so, you know, what we've seen is that when Target refocuses on things like value, that resonates with that core consumer. When they are, you know, for example, for back to school, they were advertising $5 backpacks, school supplies, you know, at a discount. Those are things that will help get their core customer excited and back in the store.
Okay, everything taken together, and we're going to talk a little bit later about Macy's and about TJX. But taken together, what do the results tell us about the American consumer, big picture?
So when you're looking at these retailers, whether it's Walmart from last week, Target today, you know, these retailers that are serving that middle income, lower income household, what they're seeing is that consumers are still spending, but they're being cautious about what they're spending on. They're making very careful decisions. And so as you've seen some prices come down, for example, we are seeing food inflation easing. We are seeing shelf prices come down for some items. that gives consumers a little bit more flexibility to perhaps get back into some of the more discretionary items. And if you think about it, if you go to a fast food restaurant and a value meal is $15, and you could spend that $15, or you could spend $15 getting 2 T-shirts for your kids at Target, those are the kinds of decisions that consumers are making, especially in that income bracket.
Hey, one last question. Walmart getting rid of its JD.com in China. Just real quickly, how do we need to think about that?
Well, I think this is a strategic exit for Walmart. They traditionally will go into partnerships, learn a lot from their partners, learn how to do things themselves operating in a foreign market, and then take over that execution themselves. I think when you're talking about China, a lot of retailers have become much more targeted in their strategy on how they're going to execute in that market. And to me, this exit from JD.com is really just an amplification of some of the policies and procedures and ideas that Walmart has had with their international business.
All right, great stuff as always. Jen, thank you so much. Jen Bartashus, she's Senior Retail Staples and Packaged Food Analyst for Bloomberg Intelligence, breaking down some of the day's retail news, but that ain't all.
It's not all. By the way, shares of JD, ADRs of JD, traded here in the U.S. down 4.8%. A little preview for one of my decliners, Carol.
Yeah, and pressure on the Chinese market from what I understand overall. So, yeah.
Okay, so Target shares may be surging. JD, not so much. Macy's, not so much. Macy's shares sliding earlier, the most intraday in a year. This after the company cut its net sales guidance for the full year. It cited a more discriminating consumer and heightened promotional environment. Mary Ross Gilbert is Bloomberg Intelligence's Senior Retail Analyst. She joins us from Los Angeles. Okay, so we have known that Macy's has been facing struggles for years at this point. What did we learn that investors did not like so much in the most recent quarter?
Well, I think what investors didn't like so much is the fact that they missed their top line estimate. So they were looking for a sales decline, just not to the magnitude that they experienced. So what that meant is that their comp sales, and we're really looking at just the go-forward store base because they are planning to shutter 150 locations, but those stores and their nameplate were down over 3% on a comp basis. And the reason, look, Macy's faces secular challenges as an operator. They're less convenient because they're large department stores, and they're facing the competition from more convenient and competitive shopping options. And this includes not only some of the specialty apparel retailers within the mall, but it also means that some of the more promotional or off-price operators, such as a TJ Maxx, some of those discount operators, including, even Burlington stores.
I thought you were going to say, Mary, I thought you were going to say competition from online, like Shein's and the like.
Yeah.
Well, that's also playing a factor too.
Okay.
Absolutely. So when you just think about the overall competitive marketplace, but also you should note that Macy's is also very promotional. Almost every day they're advertising a promotion. And if you click on Macy's online and then you start to go away, it'll immediate flash, we'll give you 25% off. They don't want you to leave. So they're doing what they can. But the one thing that we did see in their numbers is that this new initiative, which only began in the first quarter with the new CEO, Tony Spring, who came from Bloomingdale's and really right-sided that business. What we did see is that the 50 new stores that they've enhanced, what did they do? They brought back service. Service has been absent from department stores for many, many years. They brought it back in these 50 stores. They enhanced the assortment. So that meant that they brought in new brands like Karl Lagerfeld, Avec L'Ami, Donna Karan, and French Connection, and that is growing sales. So their comp sales lifted 1%, outperforming the rest of the go-forward stores by 470 basis points. So that's huge. The other thing they did, those stores are brighter, they're cleaner, they have more modernized signing, and then of course they have salespeople in handbags, in shoes, in fitting rooms, and in ready-to-wear for both men's and women's. And that is really giving them the lift. The problem is they need to move faster and they need to extend it across the rest of the go-forward stores in order to be successful. So I think what investors are not happy with, it's not moving fast enough.
So Mary, essentially bottom line, Macy's has figured out kind of the secret sauce of what they need to do. They just got to kind of make up the batches and get it out to everybody. Is that essentially they just have to move quicker? Like they've figured it out? Is that fair?
Yeah, Carol, I think they do. I think that's definitely what we're seeing in the first and second quarters with those first 50 stores turning in positive comps. That's certainly what it looks like.
Yeah, because I always think about, it's the same thing I asked Jen Bartashus about, when it comes to Target, who is their customer? Like, who is Macy's customer?
Hold on. There's a cat in the video. Mary. Other side. Oh, who's this cat? I love this cat.
No, behind you, over your right shoulder.
I'm making you look, but there really is.
It's grabbing treats as we speak. No, just kidding. Just kidding. That's really funny.
It was really cute. Yeah, it's really cute.
It looks like a statue. It's not moving. Mary, who is the Macy's customer, though? Like, I do think about who's shopping at these places.
Yeah, so I would say about half their customer base, or more than half their customer base, is probably earning less than $75,000. So it's a household income that's being squeezed by inflation. And so that's leaving them with less discretionary income to spend on apparel. One thing that has turned out to be strong and is a good draw for them, of course, is cosmetics. And that's the reason why you've seen them expand the cosmetics presence in all of their stores. Every year it seems like it's been expanded.
Is that Blue? That's Blue Mercury, draw, right?
And it's higher margin.
And that's Blue Mercury, correct?
Oh yeah. Well, so yeah, not all of the stores have Blue Mercury, but yes, that includes Blue Mercury, and of course Blue Mercury, which is more upscale, is also it's a growing chain for them, and they delivered 2% positive comps in the quarter. So yes.
Love my lotions and
from Blue Mercury
everywhere. And I'm sure investors love the margins when it comes to anything, whether it's perfumes or cosmetics. It's pretty crazy. Hey, the other thing I do love, I'm Carol Massar, and I like going to TJ Maxx companies. I'm just going to put it out there, and I probably need some interventions. But having said that, TJ Maxx, we also got some news from them. We got earnings, and they also are taking a stake in a Mideast brand. What do we need to know about this one?
Yeah, so because the company has really created this winning formula, and what that means is there's years and years of knowledge and expertise, plus they've made major investments in their people, so they have longevity with their employees. This includes training buyers. It takes 4 to 5 years, by the way, to train a new buyer, just to give you an idea. So with this expertise, and as they have grown up through the ranks, this gives them an opportunity to continue to grow internationally. They have always had an interest in Mexico. So of course we saw that news after the first quarter, in which they entered into a joint venture with Grupo AXA. So they're going to be able to use the secret sauce in helping those businesses grow, which will make their investments flourish. And so the same thing is going to happen with this latest investment, which is a Dubai-based company operating in the Middle East that operates about 100 brands for less, is the name of the store concept, in that market. And could we see more? Absolutely, because this is a good use of their cash, investing in being able to capitalize on their own expertise, and allowing for, some of these executives that they've groomed to be able to have a place to deploy their expertise. So yes, we're going to see more of that. And that just goes to show you that when you're looking at retail, off-price is winning, and TJX being the largest, it's a $56 billion global company, the only one that's global in off-price, and the only one that also has e-com. They appeal to a wide customer base.
I keep thinking it's amazing that nobody's been able to kind of mirror what they are doing on the scale that they really just own that. Hey, Mary, thank you so much. Mary Ross Gilbert, she's Bloomberg Intelligence Senior Retail Analyst, breaking down what we got from Macy's and TJX. There was a big drop of retail, both some gainers and some decliners.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about Just about 18 minutes left to go, but we do have some headlines crossing the Bloomberg terminal.
Yeah, watching shares of Apple now down about half a percentage point. The vice president in charge of the App Store leaving as the company reorganizes to respond to changes in global regulations. Our own Mark Gurman reporting that Matt Fisher, who's run the App Store business since 2010, is leaving Apple in October. That's according to people with knowledge of the matter who declined to be named, discussing unannounced moves. The App Store group is being split into two teams, one overseeing Apple's own store and another responsible for alternative app distribution.
Interesting. The story goes on. Phil Schiller, the Apple exec who is ultimately responsible for the App Store, is making the changes in response to regulators forcing Apple to allow alternative stores and payment methods for apps on the iPhone, iPad, and the company's other devices. So some different things going on there at Apple.
Just pulling up the when this news broke, if it did send shares lower. Yeah, we saw a spike lowered actually to its lows of the day after that news came out from Mark Gurman, recovering a little bit kind of back to where it was before the news broke.
All right, so some good stuff going on. Hey, we're watching.
Speaking of stocks.
Apple.
What? I don't know.
Where you want to go?
I want to go drive to the close. Yeah.
Let's talk about the markets. They're bouncing around. We have seen rates, though, move down today. Abby Roach is portfolio analyst for the Empiric LT Equity Team at Allspring Global Investments. She joins us from Washington, D.C. Abby, good to have you here with us. Tell us like kind of what's front and center and what you contribute to your team in terms of strategy and what you focus on as a result.
Yeah, so I'm the consumer analyst for our team, and consumer's been front and center this earnings season, just trying to get a handle on how the consumer is holding up. And I think we've been seeing some good prints recently from companies and good updates, starting with Walmart last week, getting some encouraging data out. And then again today in terms of both the Target update as well as TJX. So keeping a close watch on the consumer, but thus far we're hearing that the lower income consumer continues to be a bit challenged, but outside of that, the rest of the consumers seem to be holding up relatively well.
What do you mean by a bit challenged?
What we've been seeing from them is more pulling back in terms of spending based on really needs-based spending, of really watching their budgets pretty closely, and heard this starting in the earnings season with some of the consumer staples companies. Talking about Mondelez was one that was talked a lot about them seeing really around $3 price points. Really sensitivity there in terms of the basket of pulling back in some items in order to meet the dollar budget total. So we've continued to hear more discerning behavior from the lower income consumer. But in terms of the middle and higher income consumer, what we've really heard is that they're being a bit judicious and being mindful of spending just given elevated pricing. But we really haven't seen a change in terms of behavior from those consumers based on needs.
Well, I think sadly the fact of the matter is the lower end consumer has been a bit challenged for years at this point. And, we hear that over and over again. We've heard it over and over again. I'm wondering if in your view, that is giving you any signal, Abby, about the health of the overall consumer, and if the overall consumer in every segment is strained the same way.
Yeah, I would say, I don't think that they're strained in the same way as the lower income consumer. I think we've seen the elevated pricing has been frustrating for consumers across the board. And I think what we've heard from customers, what we've heard from companies this earnings season is really that customers are being mindful. But in terms of those who are watching spending based on the needs, we're not really seeing that materialize for the middle and higher income consumers. Walmart called out those consumers as being healthy last week. I think Target called that out again today. I think the biggest thing is consumers across the board are seeking value and convenience, but the lower income consumers are seeking value based on needs.
All right, so let's go into some of the individual names that you are following and that you like. Home Depot is one of them. It's up about 7% on the year. Some disappointment when they first announced earnings back just about a week, a little bit over a week ago. And so we did see the stock under pressure after they cut their comp sales outlook. You like it. The stock has definitely trended higher, though, since then. So what's the story? What's the fundamental story for investors to think about investing in this one?
It's really two things. I think when you look shorter term, one of the things is just the rate environment. Is we're looking for a more accommodative rate environment. And we think we saw the Fed minutes released earlier today. We think getting a more supportive environment. Home Depot called out last week of financing sensitive projects being delayed. And we think as you get more supportive rate environment, you'll start to see some improvement in terms of that piece of spending from consumers. And then the other piece, as it relates to Home Depot, is with respect to their focus on the complex pro. And they want to gain more share of the pro wallet, but especially projects around remodeling and reconstruction, those bigger projects. And they're focused on that two ways, both organically and inorganically. Organically through their Complex Pro initiative, where they're in 17 markets now. And then inorganically with the SRS distribution deal that closed earlier this summer. So a big focus there to gain more share of that wallet. And we think a couple different tailwinds for them near and longer term.
Okay, what about when it comes to Costco, another stock that is on your radar? As Carol reminds me, it's up 33% so far this year.
Yeah.
It is, and it's one of those stocks. Costco is exposed to higher income consumers relative to other retailers. And one of the most recent announcements from the company was with respect to the membership fee increase. And we see that as a huge benefit for them because when you look at their EBIT, the membership fee income makes up more than 50% of that. So we see a natural tailwind for them as member fees will increase. And they've also talked about really reinvesting in the value for members. So we think they'll continue to do both of those things while there might be some sensitivity in terms of the fee increase, we think there's so much value at Costco and they're really focused on delivering that we think there will continue to be a benefit in terms of their EBIT.
Apparently Carol hoards Costco paper products in the basement.
I don't. My husband
during the pandemic, actually, I know that you never ran out of toilet paper.
We did run out. It was pretty sad.
What was it, 3 months in or something?
No.
Finally, the supplies dwindled.
It's not funny.
The basement full of toilet paper.
I'm from a large family, so growing up, my family we had paper goods coming out of in our utility room. Costco boosting their annual membership fees. That's got to be a good thing, right?
Yes, about 8.5% for that.
Yeah.
And we think they continue to drive value for members. And while there will be some sensitivity to that, the renewal rates are higher than 90% for the company. And as consumers continue to seek value, Costco is synonymous with value for consumers. So we think that those membership renewal rates will continue to be high.
25 seconds. Ulta. Warren Buffett, we know in their latest filings, has a position. We just talk about it all the time here. Everybody's buying cosmetics. It's kind of a big thing. Real quickly, 20 seconds here. Your thoughts.
Yeah, there's the durability of the beauty category, which we like here in an environment where a consumer might be more sensitive. But also in terms of Ulta relative to other beauty retailers, they sell across from mass to prestige pricing. So we think that really benefits them here for consumers who might be looking for cheaper alternatives that they can shop across the spectrum.
All right, good stuff. Abby, thank you so much. Abby Roach, portfolio analyst for the Empiric LT Equity Team over at Allspring Global Investments.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.